ETFs saw over $1.1 trillion in total inflows in 2024. That was a record-breaking year. So far in 2025, they're on pace to exceed that. And my next guest says there were a few trends in June that could give a hint about where the rest of the year could go. I want to bring in Todd Rosenbluth, TMX VettaFi Head of Research, for this week's ETF report brought to you by Invesco QQQ. Hey, Todd, it's great to see you here. So obviously, the ETF business is an unstoppable machine and trend. In June, what really stands out about where fund flows were going? What kinds of developments did you see?
So there's two areas that we focused on in some recent commentary. One was actively managed ETFs. The second was fixed income ETFs in general. So for the year, actively managed ETFs have gathered roughly 40% of the new money in 2025 in the first half of the year. They are roughly 10% of the overall asset base. So punching above their weight, we've seen strong interest for actively managed ETFs in both the core part of the products as well as offering additional income. And so we're really excited to see that growing demand, low-cost products that have come to market from T. Rowe Price and Fidelity among those firms. That's really caught our eye.
I'm always curious about this, Todd, particularly in the ETF business, if it's a push or a pull. In other words, ETF providers are very good at coming up with lots of different creative, obscure in some cases, new products, right? And I'm always curious if it's because there's demand for them or if it's because they want to sell more ETFs, right? So what are we seeing in this case?
So we are seeing a growing supply of ETFs that are more complicated, that are trying to solve a problem, but that it's a more complicated problem. So we've seen a growing number of options-based ETFs and other ways to generate income using the ETF wrapper. So Calamos, for example, launched a suite or auto-callable ETF recently. We've seen Innovator bring some products to market that are new, that are providing different level of downside protection. But yet we are also seeing new products come to market that are fitting in with the broader theme. So Vanguard, they don't launch too many products. Vanguard today launched 3 fixed income ETFs. We've seen Vanguard increasingly embrace actively managed ETFs that I was touching on earlier. They launched an active ETF as well as 2 index-based products today. We're really excited about what Vanguard has been doing within the fixed income ETF universe.
Well, and let's talk about fixed income more broadly, because that has really become a juggernaut, of course, within ETFs, and the growth that we've seen there has been pretty incredible as well. And I know you guys have done some work and some survey work on sort of subsectors within fixed income ETFs and where they have been popular. So what have you been finding out?
You're right. So at VettaFi, we recently had a symposium where we asked advisors where their focus was for the second half of the year in fixed income. And so investment grade corporate bonds tend to be relatively popular. We saw interest in that. We saw interest in short-term treasuries. And then municipal bond ETFs. That continues to catch my eye when we see strong demand for the sleepy part of the fixed income marketplace. But we've seen success. We've seen Vanguard have success with their product, their low-cost diversified product. And we've seen increasingly firms bring actively managed municipal bond fixed income ETFs to market. Goldman Sachs is a name that comes to mind. They've launched active municipal bond products that's caught our eye and starting to garner some interest.
So, Todd, all of this said, what are you watching in the second half of the year? What are you going to be paying most attention to?
So I think we're on pace for another record year. We're going to cross $1 trillion in overall ETF flows. That certainly seems to be the pace. You showed the numbers earlier. We're likely to pass $300 billion again for the fixed income ETF universe. We're at about $185 billion at the mid-year point. So we're excited to see what's happening in both the active space and fixed income. And there continues to be innovation within the index world as well. We've got some exciting products that we're seeing tied to our VettaFi indices that are likely to launch later on in July.
And Todd, whenever I talk to you about this stuff, I like to take a step back. Where are we in the ETF industry in terms of size versus the traditional mutual fund industry? How is it now stacking up?
Yeah, so mutual funds are still considerably larger than the ETF space, but the gap has been narrowing. So mutual funds continue to see net outflows industry-wide. We continue to see net and record inflows for ETFs industry-wide. But the lines are blurring. I mentioned Fidelity and T. Rowe Price. Those are two of the leading firms within the mutual fund world. Capital Group, another firm that's known for their American funds. All of these firms are increasingly putting their focus onto the ETF space. So we're seeing some of that money move from mutual funds to ETFs. That's a great thing for investors. That's a great thing for advisors that are working with them.
Todd, great to see you. Thanks for joining us.
Thank you.